Check, check, check. I think we are good to go. We got a couple guys. That's all right. Hopefully, let's see. Is our crew still streaming? Yes. Bunch of degens. Anyways, so well, welcome. We just today just gonna go through some quick stuff. I think a lot of us are already trading hot and heavy in the heat of it right now. It's about 12 o'clock Eastern, so probably the lunch hour for most, and figured this would be a good time for stuff to kind of start slowing down. So there you go. And if y'all haven't done your trading plan for the week, this is us doing ours live with you. So that said, just got to get a disclaimer out of the way real quick. Options are not for everyone. We are primarily an options trading group, and they do pose risk. So before we get started, just want to point out there is you can call 188 options and get a copy of standardized risks and characteristics of options before you start trading. You should do that. All right, so I'm just gonna start jumping into this. We'll start moving pretty quickly here, and then we can check out the charts and get the plan together. Typically, if you're gonna be a trader for any sustainable period of time, you're gonna have to pay attention to a lot of economic data. And so this is what we're gonna be doing this week, every Monday. We'll go through, kind of check out what were the major headlines of last week and maybe some things that hit over the weekend, and what could potentially move markets and what we need to be aware of moving forward. So I think one of the things, there was a lot of EV stuff going on. I saw Ford was pretty low, had a nice bounce this morning, but there was a headline, GM and Honda doing a partnership to develop the lowest priced EVs, but they're not going to be available till 2027. A lot of headlines last week. I think it was Tesla starting to do like lithium, looking maybe some speculation about lithium mining, and that's kind of to this end, like what's going to be needed in the EV sector. So lithium is absolutely one of them. Fed Brainerd, if I look back last week and say what was the key pivot point, it was when Fed Governor Brainerd jumped on, and she is historically like the most dovish. So when we talk about dovish, well, you'll hear dovish and hawkish when we talk about Fed governors, and that's in regards to their stance of policy. So dovish is like quantitative easing, right? You guys remember that QE statement, but like, want to help lower rates as much as possible and step in as much as possible from a government perspective, and that's dovish. So hawkish is more on the side of quantitative tightening, where no, we need to get in front of inflation. So the Fed's charter, there's two main charters. One is to promote full employment, which I mean, we pretty much, it's just a matter of people going back to work. The jobs are out there. Our NFP, or non-farm payroll numbers, been over 400,000 jobs a month. It's not that there are new jobs being created, it's just people going back to work. So there's not much that they can do on that front. Their second charter is to keep prices under control, and that has to do with inflation, and that is all over the headlines right now. So essentially, Brainerd, who was one of the most dovish people on the Fed, of the Fed governors, turning hawkish, that pretty much was like, okay, well, if she's hawkish now, well, who can be left? And to that end, it's like, okay, everybody on the Fed is like, we need to raise interest rates. We've been talking about, they're talking about, cleaning up the balance sheet, meaning stop buying so many bonds, and start getting those off of the balance sheets, so selling bonds. And we've been watching them month over month over month, buying more. Now that's changing. So the fact that that's changing, that's pretty big market moving event in terms of like clarity, is they've been talking about it for so long but doing absolutely nothing. This month they will be selling. So what do you want to watch? You want to watch TLT for the most part. That's your 30-year long bond ETF, essentially inverse relation to yields. There was Ukraine conflict. I don't remember what this one was on. Yeah, I mean, the Ukraine stuff is still there. I just think anything that comes out of Russia, the market's really not buying at first. So it might have some quick moves in the short term, but likely reversed for right now. But it's definitely something to be aware of. Um, so, all of this stuff is essentially rate hikes. Yeah, I think they're looking. They finally said, okay, 25 basis point hikes of 0.25%. We might see a 50 basis point hikes of 0.5%. Might even see a 0.75%. It's really just about what is the market pricing in. That we don't know. We might be able to go to the CBOE. CBOE actually has a good page. I can't remember it off the top of my head, but we used to use it in the pandemic where they have a page where it lists what's priced into the market right now. So the other thing that was on the headline list, really oil. Last couple weeks, it's been a lot about tapping into the strategic reserves, about 1 million barrels a day. We know that the U.S. uses about 65 million barrels a day, so it's not a huge thing. Won't really be super market moving, but I get these guys. But right now, I think oil is on a pullback for sure. So that's the commodity. It doesn't mean that the oil stocks are going to pull back. I can't say that really. They're so far beaten down. If you pull those charts back, I mean, those are at some pretty, even after this run, they're still pretty good, like, price level, historically speaking. So anything over 50, 60 bucks a barrel is profitable for most of those companies, to be honest. And so there's a lot of this stock. So oil execs, Exxon and Chevron executives coming to Capitol Hill this week, I believe. And this is going to be, Biden said, okay, we're going to tap the strategic reserves, 1 million barrels a day. Great. We know U.S. uses 65 million barrels a day. What does that do? His goal is just to decrease the price of gas, which is different than oil, for us, the U.S. consumers. And so now the question is, does the U.S. step in and actually set up some of their own independent measures? I think Biden was probably expecting or hoping that OPEC would follow along, and they did not. So today's move might be a little bit overdone to the downside on oil, but it's just still a lot of that speculation. Over the weekend, I think it was, China's locked down now, right? COVID lockdown.
Yeah.
I was listening to CNBC, and they're talking about, like, people in China, like, when they lock down, it's like lockdown. They're out buying, cigarettes and Diet Coke like prison days, right? Like cigarettes to trade and Diet Coke just to feel good because nothing else is out there. So, who knows? Maybe we go look at Altria. That thing's been a good stock for a little while. But again, so I think really the biggest headlines are still going to be everything inflation related. Oil is going to be a big thing, and we want to be aware of the TLT. So I think, that TLT, we'll take a look at it, but I have a trade teed up that I do like for sure. Moving forward, so we have started to get some earnings in. Not this week. We get a couple banks. JP Morgan is our first big Dow 30 component. This slide right here is the top Dow 30 companies. So I'll take a 4-quarter look, really. So Q2, 29 beat, 1 miss. Q3, 26 beat, etc. So far, we've gotten Walgreens. What I would say is that I still expect beats for the vast majority of these. It doesn't mean that the market's going to go up if somebody beats and raises. It's just how well those companies are doing. So take that for what it is. I think this week we do have the major banks. So JP Morgan is probably the biggest, Goldman Sachs, and we do have UNH. So healthcare's been on a pretty big tear this last 2 months maybe. But this last month for sure. And so that might be coming. We'll see how that goes with UNH. I wouldn't actually expect a lot of movement from those companies, to be fair. They've ran so much. I don't expect any like major moves in general from a price action perspective, but you guys will see how we trade it. Here's the week in as a whole. So Friday we're closed. It's Good Friday. It's probably one of the only days of the year that like everybody's closed. So I think what is it, this Sunday? Easter? Okay, yeah, maybe.
Oh, is it really?
Yeah, I think so. Nice.
Wow.
Yeah. for sure. So Thursday, I'm going to be looking at some. You guys know what time spreads are. Got some extra juice that we can squeeze for sure out of the options, and just be aware that might actually affect some of the weekly pricing structures of the options as we go through this week. So be aware of that. Just one less day. Tuesday is our biggest day of the week, hands down. So we get core CPI. It's not necessarily the biggest. It's one of the biggest factors that the Fed looks at determining where the economy is. So remember, two charters for the Fed. One is maximum employment, which there's really not much more that they can do on that front. And two is stabilized prices. We're sitting at, you guys will see what the expectations are. But just keep in mind as we go through this, the Fed came into all of this with a goal, inflation rate goal of 2.5%. So, and typically inflation or CPI data will be 0.5% move, give or take at the most. We're not looking at anything like that. So I'm gonna kind of push this. After core CPI, we get core PPIs, producer price index. Thursday we have jobless claims and consumer sentiment. And again, Friday closed. So let's get into it. So let's say today we do have, actually I don't have any like major stuff. Today we have a bunch of bill auctions. What I would say is normally this is not something that we want to watch, but because we know that the Fed is now in bond selling mode, we want to be aware of what that might do to the bond market. There's been a ton of talk about this 210 yield spread. It's not something that you day trade on, that's for sure. I do have some marks on some charts that we could take a look at if you guys want to see what that looks like. But it's just something that can be out in ether. It's not, for me, it's actually not, it's not very reliable. But it's just something that you should know that the larger majority does look at. So if that's what the sentiment is, then, well, sentiment does move the markets for sure. So tomorrow's Tuesday, we get core inflation rate. So times on the left here, I'm in the West Coast in California, so this is Pacific Standard Time. If you're on the East Coast or whatever, just make adjustments for you. Yeah, this is 4:30 in the morning my time. Sucks to be a trader on the West Coast. And the first big number is core inflation. So just to make note, there's a big difference between the core inflation rate and the inflation rate. And this is also CPI. So my calendar calls it inflation rate, but it's the core CPI, Consumer Price Index, i.e. inflation, year over year. And there's a standard inflation. So the difference between the two core inflation rates or core CPI does not include things like oil, gas, and food. They say because, well, that's pretty volatile, which it is, but to keep a more stable view and metric, they remove gas and food, which are like personally my biggest expenses. But anyways, so here's what we want to know. So on the right hand side, we have the previous number and we have consensus number. So what consensus means, that is what the market is currently pricing in. So if the market is currently pricing in, an inflation rate, look at this, 8.4%. Remember, we're talking 2.5% target for the core, right? We're 6.6% consensus on the core. This jump here, what is that, 7.9 to 8.4? Dude, that's a huge jump. I mean, that kind of jump month over month really never happens. So this is the messaging from the Fed. We had a ton of speeches last week, and there's nobody that's like, we don't need to raise rates. We don't need to start cleaning up our budget or our statements, balance statements. So, I mean, where are rates going, right? And again, the whole purpose of this is not to limit the supply of money. It's really to slow spending. And in this inflation rate, that this regular inflation, core inflation rate metric, the base components are homes and cars. So we'll take a look at we can see car sales. I think supply chain is going to be a big thing for sure, and we'll get into that also. And then we get some housing numbers that might give us a good idea or indication of where we're going. So let's see. core inflation month over month is not going to be that big of a deal. What I can say is Fed Brainerd. Does anybody know? Pretty sure she got nominated to be like vice something, but she wasn't. She's getting a promotion. So her making a speech tomorrow morning, 8:10 my time. What is that? 10:10 ish Eastern or 11:10 Eastern. That's going to be a big deal. So just be aware. Tomorrow's our biggest day. Might see a flush at the end of today in preparation for that, and then my guess maybe we start bouncing, but we'll see. Wednesday we have what's called PPI. So this is probably our second biggest number. So CPI is consumer inflation index. PPI is producer inflation index. So why does PPI matter? PPI is kind of a leading indicator, if you will. So if I'm a consumer, I get my goods from the producers. So the producer index is the producer inflation rate. So what's the inflation rate that the people producing our goods are receiving? Do they just eat that? No, they pass it on to the consumers. So they haven't been eating that at all. It's basically getting all passed out. So core PPI month over month, we are looking for 0.05% consensus, and look at that, they just pass it right on down. And then we also have a 30-year bond auction, so that's probably the biggest one. When we get into bond auctions, the Fed would be buying recently. Now they're looking at selling. So if there's large selling pressure, what does that do to a commodity, right? And you know, don't be like, a bond is it's an asset, right? So if the bonds are getting sold off, interest rates will go where? Typically. We also get JP Morgan. That's our first big bank earning Wednesday after market close. Thursday, this is where we can maybe take a look at some of those numbers. We get retail sales month over month. I don't think that's going to be a major market moving event. Import export prices, and really jobless claims. I mean, jobless claims, we did get a little bit of a tick up in jobless claims in terms of unemployment insurance and things like that. I don't think it's going to be super market moving for sure. I do think that consumer sentiment does move markets. This is a preliminary number, so just kind of keep an eye out for that. But overall, compared to Tuesday, Wednesday, Thursday is a pretty light day, and we do get Goldman Sachs and UNH after the close, I believe, Thursday. So by the way, Baker Hughes it's a pretty good indicator on like oil prices, things like that. We've been opening new rigs left and right, of course, why not? But it's typically on Friday. They're moving that up this week to Thursday because Friday we are closed. There are a couple early things that come out. Yeah, you see net longs, inflows, outflows. These are just basically reports you can kind of take a look at. And then typically we will do a Thursday afternoon, what do you call it? We'll do a Thursday afternoon just webinar for some of our private groups. This Thursday, we're going to do the full review of our entire implied volatility system. So with earnings coming up, I think we will kick this off. Probably not this week, but next week when we get Alcoa. So Alcoa is typically the first actual, like the official start of earnings season, and that's not this Thursday, I believe next Thursday. So we'll go ahead and kick that off, and I think we'll start this course the Thursday after. We'll be able to do some live trading with you guys. If you guys want to do this, I'll post a link eventually, probably this week on Twitter, and we'll do about $100, and then it's 6 live sessions, not through YouTube, but like through direct Zoom webinars, and we'll actually give you guys like a full-blown system to trade earnings, like the best and only way to trade earnings, I mean, consistently. So that said, let's just jump into this. So first, check if you're trading, you want to do major market indexes. So SPY, Qs, DI is diamonds, and the black sheep of the family, IWM, that does what it wants. Today, I'm watching gold super heavily. TLT always on. TLT, what is it, 123? Wow, we're pretty low. TLT right now, absolutely on the watch. Crude, and always VIX, since we are volatility traders. So this is what I'm gonna do. I'm gonna move this to a 30-minute chart, kind of zoom out. These orange boxes I have here, these are average weekly ranges. So even though the markets might seem a little volatile, they typically don't move more than their average range. I will say, last week we had this level at 433 and 443 and change that we were watching. If I wanted to take a shot at a bounce, this was going to be that level. I think we opened up Monday. It was Monday here, so around here, and we had this initial level here, 450 something, 455 as a target, potentially up to 460, which would have been a really nice short. Never got there, turned around and completely, I mean, we just tagged our spot, right? And again, if this is an average week, check this out. Look at that. Markets don't move more than their averages. So, do you have a level on SPY this week, Steven? We can kind of do something similar. I could guess what your level
is. So yeah, we talked about it this morning. I was looking at 443.50 to trigger more downside for me.
Oh yeah.
Currently, as more downside, I can see 440 as kind of another psychological level to be aiming, and then because that was like a tiny little area a few weeks ago.
Yeah. So here's what we can say. So this was our level before. If it was acting as support, now we've broken support. If we want to see it kind of break up, we might get it, right? Anything in this kind of area here would be ideally short term for a short. If I want to take this average range, I'm just going to kind of snag this, throw it right here, and just, we're eyeballing live. What would this be? I'm going to pull this back, tag this right there. So does this line up to a support level? Yeah, it kind of does. So from a downside target, I like this kind of consolidation area here. Oh, it's a big consolidation area. Once in here, right? Once in here, and then major support down here. So how would you read this if you're new to charting? So you should read this as, let's call it supply and demand, just to make it easy. So your real supply or demand area, right? Meaning where do buyers step in? So buyers are stepping in, and just looking at the charts, they're stepping in right around here. So this is about 427, 430 area. So I mean, it's not inside our week range this week, but I would put a note there that this would be a longer term value buy, something like that you could expect support. An easy way you can do this probably short term is take one of these tools. Let's see, do you have an actual, here's a fixed range. Ooh, that's right in here. 431 and change. 431 and change would not be bad. If I take this whole range, I get what? Too many lines now. Huh. Let's change this. Okay. Oh yeah, we're well below. This would be that. Interesting. It's taking me right back to that 430 level, man.
Yeah.
I don't know what to say. That's where we're having, and I keep moving this around just to. I mean, I don't want to be. What's the word? Jeez. 440, 430. That's where you have it. And I remember looking at 440 as a pretty key level back earlier on. But I would just say 430. Man, if we take this straight down from here, yeah. 430. So if I wanted to take a shot for a bounce to the long side, right? Anywhere in this range this week, it would have to be in here. So just below 430. Otherwise, I just kind of look at some pivots, right? So right now we have this 430, 443 that will act as resistance. We have another pivot here, right? Let me get my stupid cursor. 440 even was always you have this pivot here. So maybe expect some trouble, maybe a small bounce around 440, and then if we fail, 430 to the downside would be the target. Um, and again, this is like this epic broadening range, so I'm just going to pull this back to the daily. Got a lot of charts. Oh, here's this 210 spread up here. So we are no longer inverted, by the way, meaning it's not negative, so 2's minus 10s. But yeah, this, excuse all these other lines, this setup, do you want to speculate? Sure. I'll say, could be like one of these big, nice, juicy, what do you call these?
Inversion.
Yeah. It really will, like, it really could be. And that would actually set up perfectly because we have this broadening formation on the indices. So what does that look like? That would look like something here or here. And then really, you get this break. That's when everybody else is probably looking to buy. But we would be wanting to buy where? Like the first break in structure somewhere in here. Or even down here, right? So this is what I'm saying. Maybe down here, that would put you at a perfect setup. And we could be exiting when everybody else is like, oh, we're all clear up here. These patterns are not reliable, by the way. So just they are what they are. But we're going to play price action. We'll take what the market gives us as it gives it to us. So that's SPY, right? I'm going to take a look at the Qs really quick. Qs, of all the indices, you know, that's going to be most sensitive to rates, it's going to be this guy. So where do I had one, you know, kind of flyer trade long on tech, not anything other than that. And it was just, you know, if I was to pick one that could fly like crazy, that was going to be the one. By the way, these horizontal lines on my colored ones are prior month highs, lows, prior week highs, lows. So Qs, we are below last week's low. So can you say this is an uptrend? No, you cannot. At least not on this time frame for sure. It's definitely in a downtrend. Here, is this a lower high? Yeah, you betcha. Could we? Wow, could we see something similar? Yeah, we could.
I think so. Yeah.
Yeah, it's definitely beat up, right? So on this next flush, I think you could be looking at some of those kind of, you know, bottom fishing plays, but be super specific. I was looking at like Microsoft. By the way, Microsoft was this morning below 290. That's pretty low for Microsoft. You know, they'll throw the good stuff out first. Well, last, actually. And when that flushes, you'll see a quick reversal. That's what I'm going to be looking for sure. I think really tomorrow's CPI number, here's what I'm looking for. Tomorrow's CPI number, if it comes in, I mean, what they're expecting is pretty high. So if tomorrow's CPI number comes in lower than expected, that could be this peak inflation situation that we've been waiting for to give the all clear sign on the market. So just be aware, you know, it's all a lot of fear right now, inflation, blah, 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 blah. That's when you want to start really, I mean, looking. We're getting to the near-term end of it. And as long as we put in a lower bottom than this, or I mean higher bottom than this kind of section right here, around 325 on the Qs, that would be a good intermediate term buying range for sure. So that said, if I did the same kind of thing, I'm just going to tag, who do we tag? Realistically, if I want to be snipey about it, 332, 332.28 on the Qs. That's a snipe, and exactly the average weekly range happens to be. If I'm going to take a shot on the long side for a bounce, this is what it's going to be, right around here. Again, wait for your setups. Don't just think that that's going to be where a bounce is, because who knows how big the bounce is going to be. Has nothing to do with that. But just taking this, again, same kind of tactics, right? Like this consolidation range right here, right? That actually gives me a little bit lower, 325. Let's see if I pull this back and widen this out right in here. Yeah, we're about to break. Looks like we've broken. So I could expect a flusheroo, no question. Yeah, otherwise it's right in this 330 range on the Qs. for your demand zone, for sure. Supply meaning resistance up here at 340, 350. So if we get a bounce around 330, taking it to 348, that'd be a great trade. Maybe 2-week trade, but we won't get there for a little bit, probably next couple of days. The diamond. So of all the indices that, if you're worried about inflation, you got to think of where's the money going to go, right? Follow the money. That's the rule. So am I going into tech right now? No, I'm not. Am I going into S&P? Not so much. Of the ones that are, they're too interest rate sensitive. What's not going to be so interest rate sensitive is the diamonds, right? The industrials. These guys, probably the best. If I were to take a shot, it would be probably in this kind of index, right? So of the others we were looking at just now, Qs, right? Well below last week's lows, right? SPY. Oh, I don't have my thing there. SPY. We are also below last week's lows. We are not below that level on the diamonds. See that? So of those three major indices, this is probably where I'm seeing like the most strength. Not that it's super strong, but the least weakness. How's that? And again, if we do get that, probably, wow, short term 342. That would be nice. Who knows? Something like that. Anyways, and again, this orange box, average weekly range. Yeah, if we can at some point, maybe later down towards the week, head towards this 350 prior month high, that would put this in a better trend than the rest, no question. To get a good trend, we want to see all the indices kind of going in the same direction. Right now, this one's battling the other two. IWM just kind of does what it's going to do right now. I could see this easily 195 in the short term, right? But we're testing this prior week low at 196. Prior month low would be 192. So if we break, basically what this is saying, if we break this orange line, we go straight to the purple. Otherwise, this should be kind of a support level, so maybe some short-term bounces. But just keep that in mind. All right. So one thing, I wanted to take a look at gold. So if the money's not going into tech, it's not going to S&P, it's coming out of the bond market, where does it go, right? So gold itself is like super prepared, ready to roll, I hope, I think. These orange bars right here are last week's high and low. So broke out on strong move this morning on gold. Now we're kind of pulling back and retesting this prior week low. So this is gold, the asset itself. If you're trading, you look at GLD, the ETF. So it tracks it somewhat. It's not exactly accurate, so just be aware. And right here, right now is where I would take a shot to the upside. We do have a little bit of a broadening formation here. And I saw a ton of 185 calls for GLD. I'll show pull it up a little. I mean, for this week. Oh, let's see. Yeah, 7,700 volume on these 185 calls for this week, trading around $35 a piece. It's not a bad deal. And then 8,000 182.50s calls. So could that be, could that be a debit spread? It could be. That's $50-$60 for a $250 max value. What is it? Risk 1 and make 4. It's not bad. But trading to the upside, yeah, I think this is a good support level. As long as we stay over this 180, it's really 182 on the ETF itself. Once we break that and comfortably stay above it, that'd be ideal. So that's what I'm like strong look at. Also, TLT, I had a trade. It was butterfly, teed up Saturday, something like over the weekend, and this thing just dumped it. So it's a little expensive now. It was a May targeting 115 to the downside. 115 would have been, so remember, we're government selling bonds, a lot of selling pressure. This is the bond, 20-year plus treasury bond itself, inverse relation to the yield. Where would it go? It would go down, and it would go down to this 115 level right in here. So I was targeting kind of June. You want to give it some room. 120, 115, 110, put butterfly to the downside. At this point, I would really like to see it settle down. But, you know, who knows if we're going to get that. Markets will typically overshoot. So, so for now, we have two levels. So we have 124.25 for potential resistance. I think realistically, we might get into this 128 kind of scenario. And that butterfly that I sent, it's like $50 for a $500 max value. For right now, I think we might go a little sideways before it actually does anything. So I would just wait till you can kind of get up to this kind of 128 value area, maybe get it under 50. And that one would have some time on it. Oil, again, so yeah, pop and 95 rejected. So here's our supplies, or right here, around 93. If we break this kind of level, we should actually go back down to somewhere around 87. I would just say I don't think that's going to really affect the oil stocks themselves. They didn't get the move that crude itself did going up this whole time, so there's not as much of a move to pull back on them. There was GNat gas. So on the contrary, though, Nat gas here is on an absolute tear. So I don't remember. Do you remember the tickers Ryan was talking about? One of our other traders is all over this play right now. But take a look. UNG. I don't remember. Anyways, there's a handful of nat gas plays that might actually work out in your favor. All right, so the VIX, we are trading at 23. So 25 here, we're in this kind of like area right now where debit spreads are your friend, not so much like straight long calls like they were last week. We could, if we get a dumpster fire, we could pop real quickly to 30. So keep some VIX 30s on your radar. Take a look at the chain. Maybe if you want to trade UVXY for some short-term bounces. Or pops that could be in, might not be a bad idea. So those sectors, we get you some targets. Take a look at what you want to do when the indexes are coming near those targets. Then take a look at your subsectors. Right now, strongest subsectors I see really. So I'll move this back to a 30. GDX is that gold mining ETF, just chopping up to that 41 real resistance. Almost got there today, and quick fail. So GDX I like over, well, I like gold too, but GDX, fundamentally, these are the miners. So the miners' biggest cost is oil and gas, and so if oil is going down while gold is going up, that's the bullish scenario for the miners. There'll be a bit of a faster mover, but just be aware these commodity trades, they actually trade a little bit differently than your standard equities. So there's a lot of after hours trading, so you got to be aware. Very, very gappy. Otherwise, if I zoom out on daily, these two here do not look that good at all. But you might have been, even me. So we saw Target running, we saw Walmart running. We were talking about a lot of the where do you put your money in kind of recession situations, and this sector, Target, Costco, Walmart, was getting a lot of attention. We just tagged last week's high on the index itself, so I think Walmart takes a breather. Some of those retailers for sure might be able to take a little breather right now. I would throw on some probably neutral trades there. XHP is the home builder, so this is probably one of the most beaten up sectors. Look at this, just gross. But homes are they're still selling right now. This does look like a potential reversal setup. Not quite there. Over 62.92. Really. Then we're definitely going up. But we might see some people bottom fishing in this home builder and maybe a little bit of the retailer sector. So I had with it, Home Depot probably heavy watch for sure. So that said, I'll just jump into Roblox. You suck. You saw that happening too. You just kept quiet.
Yeah, I saw it.
Oh god. Anyways, Home Depot, right? So here's Home Depot. We got an inside. Is it an inside month? No, not quite. Potential reversal setup. So far, we're not there. I want to see what? I want to see this clearing 312 on the upside. So this 1, 2, 3 candle setup here was ideal. We're gonna get a little breather candle, and then the next one, probably tomorrow, we'll find out. So today I might be looking, how is this going to close? If it's super strong, then I do like it. So weekly bars, 312 was last week's high. We broke that this morning, came back, and now we're under it. So if we get a close up here, this 312, your target's really 340. Interesting. I was thinking 320, but let me take a look at this chain. So options chains on Home Depot. Wow, 315 calls for this Friday. Super busy, almost 8,000 volume. Also 320s, 48,000 volume. I'm gonna look at the most busy expirations now. Yeah, it's mostly centered around this week. We got 330s, 315s, April 29th, 320s, a lot of 330s. April 29th. When does Home Depot report? So I'm going to take a look at that. They report in May. All right. So April 29th is not going to give me. You could look at like a 320 calendar targeting right around here, this first pivot, depending on if we can actually get out of this. But what we're looking at, so we're looking at this lower structure here, right? Breaking. So lower high, lower low, higher high. Now we look for an entry somewhere like a higher low. So this 299 is like definite pivot. Could we get it somewhere in here? Yeah, we really could. So, I mean, we're on this kind of watch level right now. Home Depot could do something for us. But if it bounces here and breaks through 312, 340 is your medium-term target on this guy. I like it. Do you have one on the watch, Steven, you want to take a look at? Oh, AMD. 97.
AMD, I think we obviously covered that quite a bit. I don't think we covered it on stream. But obviously we opened below 100 this morning.
Yeah.
We're still down there, about 97. So I think me, you, and pretty much everyone else is looking for more downside on AMD. Twitter, I was expecting more downside with the news about Elon, but we seem to be moving a little bit higher. So
really?
That goes. Yeah, we're in positive territory right now. We're up 2%. AMD, I think, is probably the strongest lock for the downside move.
Yeah.
As of right now.
So
Tesla's always on there.
Tesla's major on there. So here's our break support, right, on AMD. You guys can see this pretty clean on 100, 100, 100. Do we come up and retest it? I don't know. But if we do, that would be a better entry. And I think we just want to give them a target real quick. I'm just going to, again, take this kind of volume profile. Look at this, 80 bucks. Realistically, 90 on the first hit would be right around here, right? And then could it drop down to 80? Yeah, it could. And AMD is like, it is a fast mover. So the option chain, I was looking at AMD this morning. I saw like, dude, you know, is it a lotto? I don't know. It's like $7 right now for an $80 put. The thing is it in range for someone like AMD? It kind of is. I think they're what's average daily range ADRs here are 103. You get like $10 a day average daily range. I mean, that's a big range.
Yeah.
So if it
Especially
flushes,
in terms of percentage for
oh
that
yeah,
size of stock. I mean, it's a massive range.
yeah. I think you have like the floor somewhere in, one like 70s for sure. that's that's a bit speculative, but for right now, we can go candle to candle, right? Zone to zone, right? So your 89.54 right here would be your realistic actual target. Tag, 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 tag. This is the next after this support here is broken. Right here, 89.20 is your realistic next level support. Does support kind of like, you know, go through a little bit before it bounces? Yeah, absolutely. So maybe set an alert for yourselves down here if you want to go long. If you like to be a long trader, that's fine. Just wait for your setups and then set an alert on your levels. Um, Tesla was a big one. Ooh, what a gap down. Gross. That is bad. So, you had a level here? I have a little um, dynamic support actually, which would take us, interestingly, right around 900 bucks, 920. I kind of like
Yep,
920.
I was looking right around that level as well.
928. Yeah, there's a little pivot right in here.
Yeah.
920. You got this gap, so what do we here? Actually pivot. That's where this first breakout here was on that, yeah, $900 break. I remember that. And we went straight to 12. So now do we retest? Oh yeah, look at this. If I pull this back 900 bucks, that's going to be your critical support. Does it make sense to go back to 900? That's about 80, 90 bucks from here. I think it does, dude.
Yeah,
I might set something up here.
I think the contracts are at about $2 for the 900s.
Oh shit, you're going this week. Yeah.
Yeah.
I mean,
Yeah.
what I could say, 200 bucks, 17,456 volume for a contract today. It's heavy. You will see, okay, 950s, 27,000 volume. So if I wanted to swing something short term, swing meaning overnight, I would realistically look at a 950 to $900 put debit spread, which would put you, because again, we want it to go through our initial strike and then really sit and rest right around our short strike. So 950. Ooh, that looks good. That looks like a legitimate, traders trade, higher probability. Sorry.
Mm-hmm.
950 to 900 debit spread. This is going for about 600 bucks right now. So $50 wide, we know it's a $5,000 max value. So risking 1 to make 9, something like that. No, risking 1 to make 8. That's pretty good. And then targets right here at that support level. Can we do ourselves a little butterfly? Maybe make it $50 wide. Not, yeah, the butterfly here doesn't actually make a whole lot of sense. It's $476. You'd have to go a little bit farther out. So I'm going to take a look at the chain and find the most traded today. Man, they're going, the block orders, they're going low. They're in the 800s.
Oh man, I didn't even see that.
Yeah. I got block orders at 500 lots a piece. So, I mean, they're buying 500. They might be selling 800, 790 put debit spread, put credit spreads. Maybe that makes sense. They're not really collecting a whole lot, so I don't know that does. Maybe they're buying a $10 wide put debit spread. They bought that for a nickel. Max value 1,000. Interesting.
Jeez.
Yeah, they did something similar. Oh, they're going tight. on like April 14th, 850, 840 put spread. I don't know if it's a credit or a debit, but 326 of those went out in a single order too. Pretty interesting. Otherwise, on the call side, biggest calls you got 940 and 1000. So this is a single short calendar. Someone's buying the May 27th 1000 calls and selling the April 22nd 940 calls. Just if you're not familiar with these kind of calendars, that is a way of getting a long calendar, but doing it playing for a short term kind of pullback. So they would be buying something out here and selling something actually lower right in here. So they're going to collect. That's like a theta play. Not a bad play. But I do like from just a straight directional, clean, easy, would be that 950 to 900 put debit spread for, if you can get it around 6 or 500 bucks would be ideal. You have a bounce level. I mean, clearly 1020 resistance, realistically 1000 clean, 1000 even is going to be your psychological resistance for sure. So, all right, man. I think that's good. SPY, we're going down. Now we got the flusher.
Nice.
She gone.
Finally making some money.
Yeah. Gold. Oh God. I think gold bounces still. I mean, I'd still be loading. This is gonna have to be a swing for me, but I like it.
Yeah, I like gold for sure.
Yeah. Boeing was one that did pop over the radar. It's not really getting anything major right now, but I'll take a look real quick. So you got like hammer on the day, hammer on the week so far. Monthly low, monthly going down, heading down. If we get a bounce around 175, that has been your kind of short-term support. So remember, if you're gonna buy something, that's not affected by interest rates, this is probably kind of your space right here. You have bank earnings coming up, but I don't want to say I'm not feeling the bank earnings so much right now. Not at least not like they're gonna explode.
Right.
What do we got? Yeah, we're on 170. Look at this crazy gap fill. 158. You got Phil. There's so many gaps on Boeing though. I remember
all the time. It's like every day.
Yeah, they don't need a fill. But anyways, short term around just under 175. Prior week low at 173.86 could be a bounce level, so keep that in on the radar. Targeting 190 to the upside. Yeah, you got this short term downtrend or medium term downtrend rather. Let's look at these guys. Yeah, nothing doing just yet. Cool. Yeah, I want to see a break over, probably over 180. 183 resistance right in here. That's going to be a battle zone. So tough trading there. Probably avoid it unless it's a quick day trade with momentum. So, all right, I'll see you guys in there.
Sounds good.
Walgreens. Oh, Ken wants to look Walgreens. So LNG. Yeah, that was Ryan's trade on nat gas. This is energy play. So this is probably like your EQT kind of Tellurian. I don't know. Let's check on EQT. That's the one. Oh yeah. I mean, if you don't have this, you're chasing. I guess we're up like a good chunk on just the stock. Yeah. LNG. Let's look at Walgreens. So Walgreens, wide dump. So let's see. You got this breakdown level, 44.75, right here. Does it tee up? Yeah. So breakdown there. So you pop up, right? Break, resistance, retrace, and now you're just looking for a retest. And that would be another entry. So I got 45, give or take 45.13. That was this initial breakdown. Acted as support, pushed up, failed, came back, resistance, broke through, tested, held. You're going to come back for another test. You have this 200-day up here, 47.80 something, 47.90. That's going to be a battle zone for a while. So if it's pulling back, yeah, it'll have a quick pushes up and down through here. You're below it right now, so just be aware. On the daily, yeah, I think this guy had a nice clean break at 43.80, and your target was here, 45, which you hit. So it's now a new trade, right? So the next trade would be waiting for that candlestick setup, looking for an inside day, probably tomorrow, unless you get a continuation to the downside. And in that case, you'd be looking at like 44 again for potential bounce. So your structure break at 44.80 is going lower if you break and close below that. Cool. All right, guys. I'll see you out there. Adios.